Welcome back to Market on Close. I'm Caroline Woods. It's time to focus on Rigetti Computing, a company who focuses on building quantum computers and superconducting quantum processors. We posted earnings this morning to help dive into that report. Let's welcome in Dr. Subodh Kulkarni, CEO of Rigetti Computing. Subodh, thanks so much for joining the show. Really great to have you.
Thank you for having me.
So when I would say it was probably late last year that quantum computing stocks started appearing on my radar as we started seeing some huge moves in share prices. I tend to clump you and your peers all together when I'm talking about them. So just tell me what sets Rigetti apart from a D-Wave or an IONQ or another name in the space.
For sure. So Rigetti focuses on what we call superconducting gate-based quantum computing development. So essentially, gates are what we use in our conventional computers to do the computation. And superconducting is the way we cool down things at superconducting temperatures where we generate the quantum effects. A company like D-Wave does superconducting, but they do what is called as annealing-based quantum computing, which is they're taking advantage of a unique property in nature and allowing things to settle down, anneal them, and to solve some optimization type problems. A company like IONQ is doing what we call trapped ion quantum computing, where they are essentially trapping the ions in some kind of traps, laser traps, and using that quantum state to do computing. So all of us are doing quantum computing to some extent. D-Wave is doing a little different with annealing. IONQ and we are doing quantum computing, but we do it with superconducting materials. IONQ is doing with trapped ions. There's pros and cons when you're dealing with different technologies. On the superconducting side, the reason we invest in it along with other large tech companies like IBM, Google, Amazon, even the government of China, is because we have the benefits of scalability. We can increase the qubit count, and also because we have extremely fast gate speeds because we are dependent on electrons doing the computing. Companies like trapped ion companies or pure atom companies rely on ions or atoms which are much slower. So they are 1,000 to 10,000 times slower than we are, and also have scalability challenges. But they do have the benefit of what we call fidelity, which is a very important metric because they are dealing with purer ions and atoms, and usually they are higher in fidelity. You touched on a very important point. The interest in quantum computing surged about November of last year, and it was caused by many announcements, including some announcements by us, but particularly from Google and some other companies where they showed that with superconducting gate-based quantum computing, our fidelities have improved now to the level where we are comparable to trapped ion and other computing modalities, but we still have the benefit of scalability and gate speeds, and that really led to excitement in quantum computing. Google also did some fun, wonderful work with error correction, and essentially what it meant to everyone was that quantum computing is real, it's here, it's going to happen sooner rather than later, and the timelines are beginning to appear in a few years. We are still doing R&D. We are not quite ready to ship quantum computers to data centers and do practical applications. But now we are talking roughly 3 to 5 years before you are going to see quantum computers in data centers doing real life application. And in the big scheme of things, that's a very short timeline. So that's what got the whole world excited about quantum computing once they started seeing that it's going to happen and it's in the next few years.
Okay, I was going to ask you about the timeline because you talked about all the excitement in share prices of these quantum computing stocks, including yours, at the end of last year, earlier this year. And then NVIDIA CEO Jensen Huang sort of took the air out of the balloon a bit when he said that 15 years might be conservative, probably more like 20 years before quantum computers are really out there. And I know he backtracked with you on stage back in March, saying that he was wrong there. So you're saying, just to clear it up, that quantum computers will be 3 to 5 years, we'll start seeing them out there more popular.
Yeah, I mean, there's both overhyping and underhyping going on in quantum computing. You have someone like Jensen Huang, who said 15 to 30 years for useful quantum computing. But then, as you correctly pointed out, he backtracked a little bit at the GTC conference, at NVIDIA's GTC annual conference. There's also some companies that are saying quantum computing is here and now. I think that's a little bit of an overhype to our view, and that seems consistent with some other companies like IBM and Google's views as well, is that we are in the 3 to 5 year range. In 3 years, you are going to start seeing commercial applications start, still not quite ready for the large volume, but in 4 to 5 years, certainly we expect the volumes to take off and quantum computers to be prevalent in data centers doing real life applications.
Okay. In terms of your share price today, it's taking a hit, down about 13%, adding to year-to-date losses at this point, although the one-year chart looking much better. And that has to do with the fact that you posted some mixed results. Earnings came in much better than expected, EPS of 13 cents, a big beat compared to a loss of 6 cents per share that was expected. But revenue was a sequential decline from the previous quarter, but also was a big miss compared to what analysts were expecting, about $1.47 billion in revenue, far short of the $2.55 billion expected. So talk to us about what happened with that top line miss.
So the numbers are in millions. We are still a fairly small business area, so not quite billions. But we are really in an R&D stage right now. And looking at revenues is a wrong way to look at quantum computing. We are very much perfecting the technology. The small sales we generate are typically to government, national labs who are essentially sponsoring some part of R&D. So it's really not a right metric to look at while we are doing R&D. I know by definition, investors are going to look at revenues, and we care about revenues and earnings per share and all those metrics, obviously. But it's not the right time to focus on those metrics. Clearly, this is an R&D company. This area is an R&D area. We are technology milestones and how we are going about executing our technology milestones are far more important. Having said that, of course, revenues matter, and a lot of our revenues typically come from government national labs or academic researchers. And in the US, where we depend a lot from the DOE and the DOD organizations, there is a bill in the Congress that hasn't quite passed. It's called the NQI reauthorization bill. And between the House and Senate, there seems to be bipartisan support. But as of today, it hasn't passed. And that's certainly hurting the overall quantum computing ecosystem. So research dollars have just dried up right now. There seems to be bipartisan support, so we are pretty optimistic and confident that it will get signed and the money will get appropriated, and that will certainly help everyone, including us. But again, we focus on technology metrics and milestones. We have enough cash. We have close to $240 million, as we said, in cash, no debt. We struck a strategic partnership with Quanta Computer in Taiwan, a big $43 billion company. And they have committed to $250 million additional cash for our technology. So effectively, we have close to almost $500 million cash, which is plenty enough to take us through the next few years while we perfect the technology and really see commercial sales take off at that point.
I'm curious, and thank you for the correction there. $1.5 million in revenue. What a difference just a little letter can make there. Apologies for that. But just in terms of the macro landscape, tariffs, all of that, how is that impacting your company right now? Because I didn't see any guidance given. It could be because you're saying it's not necessarily the earnings and revenue that investors, analysts should be focused on at this point, given kind of the early nature of your company. But how are things like macro headwinds and tariffs impacting your business right now?
When you're doing R&D, which is what we are primarily doing right now, and not quite selling commercial computers, tariffs really don't make a big difference. Most of our costs are US-based employees. Most of our expenses are also incurred in the US. So tariffs we are not really buying stuff from Asia or any other countries. We buy a few components, obviously. In any high-tech industry, we always buy a few components. But it's a very small portion of our OPEX that will get impacted by potential tariffs if they hold at the current levels. So it's not as big a concern as some other areas. Regarding the billion versus million, you were a little ahead. I mean, the expectation is that quantum computing is going to be more than $100 billion market in the next decade or so. So you're right on to think in billions terms. Right now, we are just starting, though.
I'm speeding up the process for you. And just quickly, at what point would those tariffs actually start to become worrisome for you, obviously, as you move outside of R&D, just in terms of timeline?
Well, if in 3 years, if the tariffs are substantial and some components that we buy from Europe or Asia have significant tariffs, I'm talking 30-40% tariffs or more. I hope that's not the case. That would impact us from an OpEx standpoint. On the flip side, US is clearly in the lead in quantum computing right now. And companies like us, along with IBM and Google, are building some of the best quantum computers in the world right now. So we are worried about tariffs, reciprocal tariffs on the other side too. If European governments or Asian governments decide to impose tariffs on US made goods, it will hurt us negatively in our ability to sell our products and services to those countries. So, yes, tariffs in the long term would concern us, but over the next 3 years or 4 years, while we are perfecting R&D, it's not as big a concern.
Okay. All right. Well, thank you for helping me wrap my head around quantum computing. I really appreciate it. Dr. Subodh Kulkarni, CEO of Rigetti Computing. Thanks so much.